Hello everyone, this is Matthew Frailey, founder of Breakpoint Trades. You know the drill. We've been here since 2003, providing advanced technical analysis, trade ideas, mechanical trading algorithms to individual traders and professional institutions. I highly recommend you guys check out our KISS systems. Go to Systems section, KISS Tables. You'll be brought to an area. We run this proprietary KISS trend following system on 630 instruments. We have these tables with all these different baskets from all the S&P 500 stocks, NASDAQ, all the Dow 30 stocks. You can click on these. Remember how the KISS system works. It enters a trade, it then sets a smart trailing stop and raises it up over time. It's kind of like having insurance for your portfolios. I'm sure most of you have life insurance if you're a responsible adult. Well, that's the same thing you can think about these smart trailing stops are. So, take a look at some of these trades the system is currently in. SOXL up 65% since it went long on November 1st. There's been 11 smart trailing stops. So just to give you an example, here's that system. It went long right here on 11.1. It put an initial stop at the low, and it's raised its stop up over time, keeping it wide enough not to be hit by noise like this little pullback here. And it's currently has a stop here. So it's like a life insurance protection. That's the beauty of the KISS systems. There's nothing out there like it. If you're not a subscriber to Breakpoint Trade, you just consider subscribing. Click enroll. Click on sign up now. And I highly recommend our 6-month membership. That'll give you enough time to see dozens and dozens of trade setups and trade ideas and market analysis from us. Quite honestly, this 2-week, 3-week trial is pretty worthless. It's just not enough time for most people. So I generally suggest the 6-month. It's the cheapest membership. It's about 40% cheaper on a per month basis over the monthly. Okay, anyway, let's get back to our video. Market had one hell of a day today. It was unbelievable. FOMC day. Again, this is a technical analysis review of the markets for December 13th, 2023. So for our website, we have standard webpage newsletters, and that's where we contain all our chart links to our charts. You don't get that on YouTube. That's another benefit. But this is our backend recorder, which I'm going to get started right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, December 13th newsletter. I wasn't planning to do another video today for YouTube, but given what the market did, figured I needed to. As you know, today was the FOMC day, and let me pause this just a second. And boy, oh boy, did the market react. So FOMC was today. They left rates unchanged. No one expected them to raise or lower rates. The Fed statement was most of the same, quite honestly. They said they're going to keep rates the same. It's going to be data dependent, but they did slightly pivot, basically confirm there's no more. They're basically done with the rate hike cycle. And so, as you know, that's all the market cares about is, liquidity, rates, etc. And so the market just absolutely took off. Basically a massive melt up in the market almost over all asset classes. We follow 21 market sectors. Every single one of them were up. The indexes were up big. Commodities were up big. Precious metals were up big. Crude oil, everything, basically every asset group was up today. So we'll go look at that. Huge drop, obviously, in the 10-year Treasury yield and big rally for the 20-year bonds. Remember, I called a major bottom in 20-year bonds a couple months ago, as well as a major top in rates. Again, like I said, huge reversal, recovery in the precious metals area. Big moves there. I will say the short-term warning, the VIX closed up 1% today. So with the S&P closing up, like 1.5% today, the 1.4% today. The VIX closed up 1%. Normally the VIX would be down big. So a lot of times when both the VIX and the S&P move together the same direction, a lot of times the next day you can get a little opposite reaction. So if we get some consolidation or a little pullback tomorrow, would not shock me, shouldn't shock any of you. I mean, we're a hell of a move, quite overbought. Again, the bulls, caught the football basically in late October, and they've had it since, running multiple touchdowns. That rare breath thrust signal that occurred in early November obviously has played out. And the KISS systems have done fantastic, catching most of the indexes and many stocks back in early November and have been riding this trend up. That's the beauty of those KISS systems. Next, item number 2 shows the index sector table, what transpired today and this week. Again, look at these moves on the index, especially the Russell up 3.4%. Huge move there. Russell has really roared back this year after lagging the majority of the year. The other indexes are up around 1.4% or so. Big gains for the week, up 2.25 to 3.5%. Every single market sector here, all 21 of them were up. The biggest was metals and mining, as we saw a huge reversal in the precious metals area. But again, guys, everything was up today. So every sector was up, very broad-based rally, basically a 90-90 day, volume day. Big moves for the week. US dollar pulling back very strongly, not surprised, almost down 1% for the week. Cryptos bounced back a little bit. Commodities mostly to the upside here with the move up in energy, natural gas, crude oil. The ags, which have been stronger lately, finally pulled back some today. And precious metals were up huge. Gold up 2.25%, silver up 4.5%. GDX, the miners, they came roaring back, up 6.4%. So we'll go over some more setups in that area tonight. And of course, you can see in the bond area, big moves down in the 10, 30-year treasury yields. Big moves up in the bonds. Housing market likes that, obviously. Next, item number 3 shows the economic news calendar. Like I said, we have the FOMC today, which helped power the market. Tomorrow, we have initial jobless claims. We'll see what that looks like. Natural gas inventories also, if you trade natural gas, which is quite oversold lately. We'll see if we can get a bounce. And let's go and get started with things. So, before we get into the standard charts, again, I want to talk about the KISS systems a bit here. So, here's the, again, if you haven't done so, go to the systems section, go to KISS STS tables. Again, for you subscribers, if you need to go here and set this alert on the favorites button, you hit favorites and you click this to receive automatic email notifications. And you'll get notifications once a day in your email if you got changes such as new entries on your favorites, new smart trailing stops. I mean, you can see how well a lot of these are doing. These are some of my favorites. You know, Finger FNGU up 41.8%. Bolt BULZ, one of my favorites, up 62.74% from the January or from the October 31st entry. Hella moves on these things. You can see how many smart trailing stops there's been. So the beauty is these are all very profitable trades and they all have protective stops. Again, if you're not utilizing this resource, you're missing out greatly on the resources here. Next, going to try to zoom into this. So here's some examples of some of those KISS systems. This is an example of one of the high performance versions. This is Apple. And you can see how well it's done on Apple. You can see last year, a nice long, got out, had a little long, a little whipsaw there, which is fine. Stop protected it. They went back long in January, rode that until early August. Had a little couple whipsaw trades there and then got back long. Pretty much just off the bottom. And you can see the current stop is 186.40. Next, here's some statistics on one of these mean high performance KISS systems. And again, you can see this is the 78-minute version of Apple KISS high performance. And again, awesome gains here. It's up 55% this year, which is similar to what buy and hold is, right? But it's only had a 5.5% max drawdown, whereas buy and hold, you had a 15.5% drawdown this year, which isn't huge, but still a third of the drawdown, same gains. Last year, 2022, in that bear market, it gained almost 2%, a 4.6% max drawdown, whereas buy and hold, you lost 26%. That's quite a difference from the KISS, which still made money, and 30% drawdown versus only 4.6%. So also, KISS system makes more money than buy and hold, and with a fifth of the drawdown. Average drawdown over all these years, going back to 2006, only 5.3%. Max drawdown on buy and hold is 61%. So, which do you want to trade? Next, moving back to the market indexes. So here's a daily snapshot of the 5 key major indexes. Again, just hella moves today. Look at these candles. Again, we are well outside the Bollinger Bands on all these indexes. So that is something to obviously be a little cautionary, even though we are near Christmas. I mean, you know, that is getting pretty extreme. But again, hell of a rally we've had from the October lows where we had the breadth thrust and the bearish sentiment. So seasonality is playing out very well here. Next, number 8, here's the Dow, up 500 points today. Hella move since breaking this trend line that we showed. We had a nice positive divergence there at the October lows on the MACD and RSI. Again, overbought here, but there's no divergences. A little bit on the CCI, but nothing on the MACD. Nothing on the RSIs here, but we are quite extended. Next, moving on to the S&P 500 charts. Here's the weekly view, smashing now through that resistance area. Next target would be the all-time highs there at 4,800. I think it easily goes there. Next, here's the KISS weekly system. I usually don't show the weeklies that much, but even the weekly KISS for the S&P got a new, I need to change these. It says DVT. That was our old acronym. We call them now STS, Smart Trailing Stops. We renamed them from DVT. I need to go into the settings here and change it. I haven't changed the weekly, but you can see you got a new Smart Trailing Stop raised up about 100 points. The weekly went long basically in the beginning of January there, and it's been long ever since. So, and it got out in early 2022, avoiding that bear market. That's an example of the KISS system on the weekly, guys. Did pretty damn good. Number 11, here's the daily S&P. Again, just, man, those of you waiting for a pullback, it won't pull in for you. All we've had is like maybe 1 or 2 pullbacks, 1-day pullbacks, and that's it. And then just through the roof. Just a relentless rally from that October lows. Next, number 2012 is this is the equal weighted S&P, which has came roaring back. It was lagging really badly this year, but it has regained a lot. And it was up 2.1% today. So again, the nice thing here, we're seeing broad market participation now, which we were not seeing earlier in the year. So a lot of these, not huge companies that were the previous big movers, now you're starting to see a lot of the smaller names move, and that's why you're seeing the equal weighted play here. Again, we pointed out an inverse head and shoulder pattern back in November, which obviously played out. Next, image number 13, here's the daily KISS system for the S&P. Again, I showed you the weekly above. So again, it went long just a few days off the lows there in early November. It's got a smart trailing stop at, I'm surprised that didn't move up today. Okay, I'm going to restart this again. I needed to refresh the chart, and you can see, yes, we had a new smart trailing stop generated today at 45.99, basically 4,600. That's a nice big jump of about 100 points from the previous STS stop yesterday. KISS system, the daily went long there, just a few days off the lows. You can see the stop projection, just awesome. So you're able to stay in the trend, have a nice protection insurance on your long. Next, image number 14. Here's the 4 time frames. We like to monitor. Again, you can see on the daily upper left how wide that moving average ribbon was the bottom in October. The Mark 9 cycle support, everything was lined up there for a rally. We broke through those resistance cycles, which signaled a breakout. We've held the ATR on all these time frames, even the 78-minute. Now, I talked about this education last night, guys. If you watched my listened to my newsletter, or watched my YouTube video, I said this cycle indicator is very useful whenever you see price ping-ponging perfectly between support, bounced off support, sold off from support, bounced off support, sold off from resistance, bounced off support. And then whenever you see it perfectly ping-ponging between the cycles, that's important because that tells you when price finally breaks through a resistance cycle, that is going to signal a wave 3 breakout. And that's exactly what happened today. Next, here's another example of this. This is SPY ETF on a 1 hour time frame, and you can see the same thing. This is on TradingView. I shared a workspace on this today on our community. So for those of you who are subscribers, you can use that link to follow the cycles, but you can see how price is just perfectly ping-ponging between these cycles. And then when price finally broke through the resistance cycle, that signaled basically the start of a wave 3 setup. You buy that, and it was a heck of a trade. Obviously, FOMC helped power it, but your signal was breaking this resistance cycle. So really useful guide. Next, image number 16 is the 60-minute chart. I commented last night how this channel, the slope was pretty flattish, and I wouldn't be surprised if price could easily just melt up again, and that's what happened. The largest pullback since the October lows has only been about 50 points, right? You can see roughly both of these pullbacks only 50 points. So you need a pullback larger than 50 points to break this uptrend, which is just crazy. You can see how the moving average ribbons were really squeezing, pinching. Energy was built up and it released to the upside. Overbought on the RSIs, no real divergence, of course. Next, chart 17, 30-minute view. Again, we were uptrending strongly. We consolidated a little bit today, and boom, kapow, just a huge ramp up. Crazy to see such a move like that after the market had already ran up so much. Finally, chart 18, here's a 5-minute view of the S&P. And again, you can see today we were mostly benign, going sideways, and then again, it was all about the FOMC, just straight up vertical move after that. Next, chart 19, here's the triple Qs. Again, nothing new to say, guys. All we got is that little consolidation in late November to the 20-day moving average. You had the 9 and 5 EMAs squeezing and then resulted in a big pop to the upside. The only thing I'll say is we have some MACD divergence setting up here. Again, this divergence could be negated if price continues just going straight up and the MACD makes a new high, but we do have a divergence here at the moment. Next, chart 20, here's a half-day 195-minute chart. And again, here you have a more prominent MACD divergence, and I think that's something to pay attention to. Remember, last night I talked about this being some sort of 5-wave move. You had a wave 3 up here, wave 4 consolidation. Clearly, we're in some sort of 5 here. And again, we have this MACD divergence to note. Chart 21, here's the 60-minute view. Again, nice move off that moving averages there. And of course, all you had was a 3-wave ABC pullback, which was bullish. Chart 22, here's the 30-minute chart. Again, one I showed last night. Again, up and away, Superman. Next, chart 23, here's the daily KISS system. You got a new smart trailing stop. Moves up from 377.70 to 390. So nice 12.3 point jump. Nice move. KISS system for the Qs went long, basically a couple days off the lows there. Pretty awesome entry. You can see all the projection of the smart trailing stops. Next, chart 24, here's the 4 time frames. Again, similar look to the S&P, like I said. Here's the 78-minute, which I discussed last night. You can see the price is ping-ponging between the cycles, and it broke through there, and that signaled a breakout move. Broke through there a few days ago, guys, before the FOMC. Oh, I will say on the half day, I just noticed it. There's an end of bull cycle here. So that is something to know. That could mark maybe a short-term high. We'll see if we get a pullback or not on that. Next, chart 25, the Russell. The Russell was up the most today. For the index, is up 3.4%, smashing through this little supply zone. Next target would be the upper channel. Hell of a move from that bottom inverse head and shoulder pattern. Chart 26, there's the monthly chart, up 7.6% this month already. Small caps tend to do good this time of year, and that's obviously the case. Beautiful rally off that long-term support. Resistance is up here around this 198 area, 200 area. That does it for the major indexes, guys. Let's go ahead and move on. Let's look at some of our indicators. Here's the VIX. So the VIX actually closed up 1% today, despite the S&P being up 63 points. That usually you don't see that. Usually the VIX would be way down. Okay, so when the VIX, both the VIX and the S&P are up, usually that signals a consolidation coming. So be aware of that. You do have a little RSI divergence still here in the VIX that could support a bounce. Chart number 28, here's the VIX and the VVIX together. Now the VVIX was down today, but the VIX was up actually. Looking at some of our trending indicator systems, here's the NYSI 9 EMA crossover system. Like I said, beautiful entry there in early November. Right? Beautiful signals on this system. Chart number 30, here's another system chart. NASDAQ McClellan summation with a 2 and 5 EMA crossover system. Excellent buy and sell signals here as well. Chart number 31, here's the NYAD advanced decline. Last night I pointed out a divergence. Well, even with today's rally, this divergence is still here. Notice you still have a lower high in the NYAD versus the strongly higher high in the S&P. So be aware. Again, this can be negated should, the NYAD start moving up hard tomorrow, and if it takes out this recent high, it's negated. But for now, it is still there, and you should take note of it. Next, chart number 32. Again, as I've been covering, if you're a subscriber of Breakpoint Trades, the really nice thing is we provide the live chart URLs when you have the newsletter open. Just click View Live Chart next to these charts. You'll be able to pull up the live chart URL. You'll be able to bookmark it in your browser or save it, and you can check it anytime you want, a day later, a week, a month later, versus just seeing a static image. That's the beauty of being a subscriber that you don't get on YouTube. Next. Chart number 33, here's high yield corporate bonds. Again, huge rally here as well. Remember, markets tend to follow this, and I'll show you why. Chart number 34, here's the S&P versus high yield corporate. And again, the two tend to move pretty lockstep with one another, as you can see. Just take a look at the comparisons. So that's why we always look at high yield corporate. Sometimes it gives us an early clue what the market may be doing. Here's a zoomed out view. This is a weekly chart. Again, just take a look at how similar these have moved together. So that's why I like to follow high yield corporate is guides, early guides to S&P rallies or maybe divergences. But next, chart number 36, here's the 10-year treasury yield. Got smashed today, down 4.1%. Tagging the 200-day moving average. It's in between the 50% and 61.8 fib. Will it find support there? Well, we'll see. It could be nearing a bounce area soon, especially around that 61 fib, so be aware of that. But hell of a sell-off from those October highs. Remember, this whole market rally is basically inverse of what the rates have done. Think about it. Late October is when the rates topped. That's when the market bottomed and has had its V rally. Next, chart number 37, here's the monthly view of TLT. Again, this moves inverse of rates, as you know. I got to toot my horn for pointing out this fifth wave bottom 2 or 3 months ago at this demand zone. At the time, I postulated that bonds were bottomed and that they would likely enter maybe a 1-year ABC rally. And so far, that is playing out beautifully. Whenever you see 5 waves in a direction, you're looking for a major reversal. Okay, that's where Elliott Wave can help you. If you see 5 clear waves like you have here with this RSI and MACD divergence. Next, just looking at a few of the sectors, not going to cover all the sectors. Again, every sector was up today. Here's XLK Technology. Again, it's moving up. You still have the divergence here a little bit with the MACD. By the way, big pickup in volume here. That could be sometimes you see these huge volume moves near ends of trends. You know what I mean? Kind of like the opposite of a capitulation. So just be aware. Next, chart number 39, banks, huge move, up 3.74%. Hell of a rally from that October low. Banks are loving this pullback in interest rates. Chart number 40, here's KBE, big jump, up almost 5%. Remember, I gave this as a long idea last week out of that tight flag pennant pattern. Chart 41, XLF Financials, big pop as well. Chart 42, home builders obviously benefiting hugely off those big sell-off in interest rates, rally in bonds. Chart 43, XLE Energy even managed to bounce. There's a demand zone here. Now, could that be a low? We do have a MACD divergence here. If not, there's a bigger demand zone below here. KISS systems are not long this yet, but we did have a nice reversal today. If you're long, you could probably just put a stop right below that 80.74 area. Next, chart 44, emerging markets, which I've been showing. Nice pop today. Good volume. Again, if you're long this, put a stop at today's lows, essentially. Moving on to commodities, chart 45, DBC is still down for the week. I should have added the daily chart here as well. It recovered today, but it's still down for the week. Remember, it lost its 200-week moving average last week. But it was up today. Chart 46, here's crude oil. Popping a little bit, up 1.25%. You had this little 5 RSI divergence at the lows, bouncing off this demand zone. Now, again, also on here, you can count 5 clear waves. Is wave 5 done, though? We're not completely sure, though. May not be done, but you do have 5 waves, so we are looking out for potential reversal, and we're getting a little bit of one right now. Clearly, that head and shoulder pattern played out absolutely beautiful. Chart 47, crude oil. This is the ETF, USO. Next, chart 48, natural gas. This is the weekly chart. Again, bounced a little bit today, but it's still down strongly for the week, still down 9.5%. Hell of a sell-off, quite honestly, the last few months from that channel. Next, chart 49, Bitcoin, bouncing back a little bit today. Again, not as exciting as the markets, though, today. Chart 50, here's the weekly Bitcoin. Again, so far, struggling up around this 50% fib. Another example of whenever you can see 5 waves down, look for a major reversal. We pointed that out in 2022, and that was a bottom in crude oil. Chart 51, Mara. Again, all the Bitcoin type stocks had huge rallies today. I'm not going to show a bunch of them. Here's Mara, up 12.5%, massive move. Chart 52, US dollar, down today, and nice pullback. That obviously helped the markets. Here added a potential little neckline, what could be a little head and shoulder perhaps, but again, nice sell-off that helped the precious metals area. You could see how the moving average ribbon was bearishly stacked on that bounce, and it resulted in a flush to the downside. Chart 53, Japanese yen. I've been showing this as a weekly chart, this double bottom. Nice pop here. The way to be long is FXY. That's the yen ETF. I'm in long this. Easy swing stop there at the lows. And we'll see if this can work out higher over time. Next, moving on to precious metals. Now, I got to apologize, guys. Gold, the way Stock Charts does gold here, I think they're using the current month, or I'm not sure exactly what they do, but gold had a big move up today, even though Stock Charts isn't showing it here. So, anyway, this will likely be corrected tomorrow. The way Stock Charts builds these are probably on multiple futures, and I'm not sure which one they're using. But gold was up today, so this is kind of not reflecting that very well. You can see how the ratio bounced off this trend line. I talked about that last night. Chart 56, silver, same deal. Silver was up very strongly today, but this shows it down. Apologize for that. I should have substituted the ETFs here in place of the indexes. And remember, like I said, the monthly chart of silver. I'm going to be monitoring this huge monthly coil. It's a 4-year coil forming. So energy has been building. And when it breaks out of this coil eventually, it's going to have a strong move. Next, moving on to the precious metal stocks. Here's GDX up 6.4% today. Massive move. We had this inverse head and shoulder pattern. Formed a higher low here. Again, if you needed a wide stop, you can now move it to today's lows, essentially. Probably don't really need it that tight, but massive move there. Chart 59, here's the 2-hour view. Again, been showing this little channel. Talked about this open gap that was almost filled. And boy, look at that move out of that channel. This is a lower risk area to take a long on that, guys. Chart 60, here's the 60-minute chart. It shows you the same thing essentially. Massive move up. Look at the volume. Look at these candles. That's crazy. Let's take a look at some individual precious metal stocks. So here's AEM, which we've had on the list since November, inverse head and shoulder pattern. Big move up, pulled back to this demand zone, and boy, was that a huge candle move up. Again, up 6.5% on good volume. Chart 62, gold, same deal, big massive move up there. Chart 63, GFI, here's an interesting one to monitor as well. Just going to go over a few names. Chart 64, HMY, Harmony Gold. Chart 65, KGC, this has a really nice pattern, closed right at resistance here. This could pop right away tomorrow if this sector doesn't pull back. Chart 66, MTA. This has been on the list for a while. I like this saucer bottom look to it. I think it could easily rally up to this 4 area. That's a good percentage move. Now, where did I bought MTA back here on this major trend line. This is major support. You can see it's been important for many years going back. This was the low risk area to buy it, but I added to my position today. Chart 68, SVM, it's a silver stock. Again, big pop here. So there's just a list of some of these for you to monitor. Again, my suggestion, don't try to own all these. Maybe just own a few of them or keep it simple with the ETFs like GDX or Nugget, stuff like that. But anyway, that's what this area looks like. Massive, massive moves. Now let's follow up with our other trade ideas. Chart 69, VTNR. This is a new long idea I put out last night. I thought it was a lower risk trade because you had it's not at new highs. It's been selling off. You had some active divergence here. Good volume yesterday and nice pop today. Up 8.4%. Chart 70, Amazon was also put out last night in a tight coil. Again, fairly muted move, quite honestly, only up about 0.9%, which is less than the indexes, but still an up day. Chart 70, CTSH, I put this out last night. I said it looked like it would have follow through, and that's what it's doing. Now, this is one I don't view as a long-term swing just because we're in the fifth wave move now. So I'd be looking to trail stops up, taking profits fairly quickly. Next, chart 72, AVGO. It's been on the list this week. Had a huge pop on Monday, and it's been moving up big time every day since. Take some profits if you haven't done so. That's a massive move in a short time. Next, chart 73, Nerd Wallet. I put this out 2 weeks ago out of this coil, and look at this puppy. Hope some of you caught that thing. Chart 74, ATHA. Another one I put out over a week ago out of this horizontal rectangle. Nice move up. Trail the stops up, take some profits. Chart 75, EGHT, another one. This has been working higher. Got a target up here around $4. Again, we get there or we don't, but just trail your stops up. Maybe have a stop a little bit below today's lows at this point now. Chart 76, Massey. It's also been on the list for a good month out of this horizontal rectangle pattern. My initial target was 100, which was achieved. I took my profits there, but if you're still in it, trail your stops up to the higher lows. By the way, this is how the KISS systems work. KISS system would be trail the stops up like that as well. Chart 77, BYON, another one that's been on the list from November. Nice pop. It was going sideways. I mentioned last night it could be flagging, and a nice pop off the 9 EMA. Next, chart 78, VSCO was a nice long we had back in November out of this pattern. I commented last night you have 3 waves down. ABC. So this could be bought here with a stop maybe at yesterday's lows or below the 20-day moving average. Chart 79, Airbnb, which I've had on a list for a couple weeks, has played out beautifully from that flag pattern. It's more than achieved its target. Chart 80, American Airlines. Again, I put it out at this 1280 resistance. It's hit its target. Chart 81, YPF was one from Steve that triggered yesterday, pulled back, but if you kept your stop a little bit wide, you weren't stopped out, it came back above resistance. Chart 82, Path was one from Steve on Monday. It was down, it's popped back. Jabber 83, AMBA, one from Steve on Monday, still valid setup here. And Jabber 84, FSR was a new long idea from last night. I bought a little bit today. So this has had a massive sell-off from that trendline break, but notice the huge pickup in volume here over the last month. That's capitulatory volume. I just need a trigger. I bought a little bit based on an intraday chart, but I do think this is nearing a bottom. Jabber 85, APO, it's been on the list from last night. Tried to trigger today, but came back. And that'll do it, guys. We'll see what happens tomorrow. Check on futures here. So ES futures are up 16 points here after hours, so they're up again. Just crazy town market. It is what it is. We'll stay with the trend. The KISS systems will stay with the trend, and that'll do it. Have a wonderful evening, everyone. Take care.